Money is. This is Art Berman. I'm the director of Labyrinth Consulting Services in Houston.
Excellent. Thank you for joining the program here today. We got some good levels coming in. I'm out in kind of on a remote location, so you might hear a construction equipment start up and that sort of thing. One of the beauties of the crude life, every now and then we can go out on location and do some shows inside of a work shed or one of those storage container type of a things. Are you down in Houston today?
I am. I live just outside the city in a place called Sugarland, Texas.
Sugarland, Texas. Great name. One of the reasons we wanted to bring Mr. Art Berman on today was a couple fold. One, he's got a very interesting background, which makes his perspective a bit unique. And I'm looking at his website right now, and that's one of the things he points out. I didn't realize that you have a degree in Middle Eastern history. That does give you a unique perspective, doesn't it?
It does, and people comment and they say, "Oh, that's such a, how strange to have a degree in history and a degree in geology." But to me, they're related to sort of different scales. And of course, being involved in oil, it's useful to know a little bit about the Middle East, its culture, its religion, etc. It wasn't intentional that I followed paths, but that's just what I did.
Yeah, sometimes in life it seems like the pieces kind of go together like a puzzle. You start putting together things. Wanted to ask you about the COVID-19 impact, some of the coronavirus impacts. What's your take on what's been going on? And if you want to go all the way back into last year, for me personally, I say that the coronavirus kind of impacted the oil and gas industry last year when it hit China. But I'll let you kind of pick up wherever you'd like on that.
Well, I think you're right, Jason. Looking at both global and North American data, it seems clear that there certainly were effects in the global market back in the last part of 2019. Looking at U.S. consumption data, both of oil and natural gas, it's easy when you know the answer, to see anomalies that maybe otherwise would have been we don't, that's noise or we don't understand that. But yeah, it's and the other thing I think is important is people have a funny idea that that the economy works like a light switch, and that we turned it off, and all these things happened because of coronavirus, and now we've turned it on, and everything is just going to come roaring back, and everything is going to be like it was before. And I certainly I wish that were true, both parts, the on-off switch and that it will be as before. But I seriously doubt that either of those scenarios will play out according to expectation.
One of the things that I found rather interesting about the coronavirus was how many different industries outside of oil and gas that are connected to oil and gas that got impacted. What I mean is a lot of trucking companies, and maybe there's an accountant whose husband works for Baker Hughes, and a few of the truckers that work underneath Baker Hughes use the flowback operator's wife as an accountant type of a thing. And those are the sole proprietors and the secondary small businesses that do not get counted in the oil and gas industry, but they got impacted early on last year, last quarter, early on, that type of thing. Have you ever thought of that, or has that been thrown into any of the discussions when it comes to the economy that you know about?
Well, the economy and economists and an awful lot of people are energy blind. They and it's fine. It's not a criticism. It's just a fact. And so people think oil as sort of a secular topic. We can talk about football, we can talk about church, we can talk about oil, we can talk about politics. And the reality is that oil, energy in general, really is the economy. Energy is the economy, and oil is the most critical part of the energy mix. And so part of the reason I believe that oil has been so strongly and negatively affected by the coronavirus economic shutdowns is for the reason I just said. So oil is a bellwether, and what happens to oil eventually trickles through to all aspects of the economy. And so what you just described, no, that's never lost on me. I mean, I live in oil country just like you do, and I know that there are entire towns in Texas for whom the oil business and all of the hotels and the restaurants and the transport, it's all. I mean, oil is a substantial part of the economy of a lot of towns in Texas, and there was a big boom, particularly with the Eagle Ford Shale and the Permian Basin here in Texas, and the Eagle Ford fell off sooner, but a lot of the towns just south of me in the Eagle Ford play, they've been hurting for a long time, and school boards don't have enough money, and highways are worn out from all the truck traffic, and there isn't enough tax revenue to put them back together. So, yeah, it's there's a diaspora, if you will, of industries that rely on oil, even though the people who work in them maybe have nothing directly to do with oil production or refining.
Art Berman is our guest. I wanted to accentuate on your comment about oil is the economy. And of course, we know 90 to 96% of our daily goods, from toothpaste to toothbrush to the gas to get the toothpaste to your house, of course, is petroleum products. So when you think about how much of our daily lives, that's one aspect of it. But another aspect of it is, I bring this up every now and then on this program about 10, 12, 15 years ago. I was having a few highballs after happy hour with a gentleman, and he was a smart guy like yourself in terms of the economy and how kind of the world worked. And he said that the dollar is backed, or the monetary power, which is the dollar at the time, is backed by the military that can protect the oil reserves. And I thought, boy, that's a great way to talk about the economy. Whoever can kind of control and back and protect the oil reserves, because really that's what makes the economy work. And that's what I thought of when you said that. So I don't know if you got a comment on that, or if we can go ahead and move to the next question or not.
Well, let me say a few things about that. I think it's even more fundamental than your friend over highballs suggested. That I mean the entire economy, and I don't mean just the economy today, but forever. You have to do work to survive. You have to work to get food, and most of the work that's done in today's world is done by oil, gas, natural gas, and coal. And so in early economies, when people started to accumulate surplus goods, which is to say agriculture, maybe I had a bunch of hay in my barn or wheat, and I didn't feel like doing some physical work, so I'd say, hey, Jason, if you'll go out and plow my field, in exchange for that, I'll give you a couple of bushels of wheat. How about that? And, maybe you say yes and maybe you say no. But basically, I'm giving you a source of energy in the wheat, which you can eat, in exchange for your physical output of work, calories. And so over time, we've changed the basis of our energy and our economies. But that basic trade has not changed. And so basically money is just it's just a claim on energy. It's a way of saying, well, maybe you don't want 3 bushels of wheat to plow my field, but how about if I give you currency, which is a claim on bushels of wheat? I'll just give you 5 shekels, and you can take that 5 shekels and go out and buy your own bushels of wheat. Or maybe you'd like some wheat and some barley or whatever. So money is just it's just a claim on energy, which in our world is oil. So that's a paradigm that maybe people would like to think about for a while.
Shifting gears, I'd like to transition into some of the discussions that have percolated out of the Texas Railroad Commission, have also popped up in a couple other states as well. And basically it's about nationalizing oil or having some states come in and control production. And I like to frame it like this, and you can reframe it if you'd like. But in my kind of context, I remember back in early March, before any bailouts really started, there was the talk of bailing out the oil and gas industry. Because as I mentioned, Whiting was laying a third of its staff off last July. Chesapeake, Baker Hughes in October were laying off people. So the oil and gas industry got hit last year for a variety of reasons. But they got hit. When the bailout talk started, Mike Sommers, API president, I joke and say before the reporter finished the question, he knee-jerk said, absolutely not. No bailouts. Well, then about a month later, Matt Gallagher from Parsley Energy goes on CNBC and talks about, well, maybe the Texas Railroad Commission should step in and start controlling production. Well, since then, we've had Oklahoma and North Dakota have discussions about it as well. So it's a real discussion now, and we start talking about this. I'm not for it. I'm not against it at this point right now. I am kind of just in awe that the discussion's happening, I guess. I side on capitalism first, but that's been gone for a long time. So, where do you fall on this? What are your comments on this? I'm very curious to hear what you have to say on this.
Sure. Well, the Texas Railroad Commission, the Oklahoma Corporation Commission, and the Louisiana Department of Natural Resources fixed oil prices from the 1930s until the early 1970s. They, through the Texas Railroad Commission and collaboration, compliance by Oklahoma and Louisiana, oil prices were controlled, and they were controlled by limiting the amount of output from wells. So if I brought on a new well, somebody from the Texas Railroad Commission would come out and witness it. Based on the test, the commission would say, okay, this is how much your well's capable of making, and this is what your allowable rate is. And that was done both to control prices, but also as a conservation method. That all these states, their regulatory commissions were put in place to conserve natural resources, to prevent pollution, and to protect the financial interests of the citizens. Now, a lot of that sort of got lost on people, but basically all that was given up once the United States became a net importer when our production peaked. So back to your question, to my way of thinking, it was an interesting discussion that maybe these agencies were going to regulate production. The reality is that the market took care of that for us, as I expected it would. Nothing like negative oil prices to get people to shut in production real quickly. So, I think it's kind of a dead issue at this point because the crisis of storage filling up was avoided because so much production was shut in. That doesn't mean we're completely out of the woods on that because people are starting to, companies are reactivating their wells. But nonetheless, I think that we are, as you said, we don't have a free economy. We have a managed economy, and with the economic shutdown, the coronavirus, the level of management has expanded tremendously, and I don't see us going back to anything approaching a free market system. But in the oil business, the market works pretty well.
Well, it's interesting you say the managed economy versus the free economy. I wrote that down. That's terrific, by the way. Art Berman is our guest. He does this stuff for a living, so if you want to go to artberman.com, he's got newsletters as well as some other content that can certainly be recycled and made money on your side of things. And I'll ask you about how you're making money in just a second or two as we conclude the interview, because I don't know if you're even speaking at all now that the coronavirus has kicked in gear, because I know that was a source of income, I imagine, was getting out there on the speaking circuit, whether it's selling books or getting fees or all kinds of things. My heart went out to all you guys right away. I mean, that was even from rock and roll musicians to speakers to whoever. I mean, a big part of their new economy was the live event. Because anyway, so where was I going? Shoot, give yourself a plug while I regroup myself. I got excited thinking about that for a second. So are you getting back out on the road at all, doing any speaking, or are you just doing newsletters and things?
No, So if you get on artberman.com, most of what's on there is free content. You have to register. Which is free, to actually get into the site. But most of what I put out there is free. There are some, weekly and monthly paid content, which is pretty cheap. I mean, I put out a weekly comparative inventory and oil storage report, and I'm starting one on gas. You mentioned a newsletter. There's a rig count report. But, I mean, it's not designed for high-end high-cost payers. It's just good insight. So, but yeah, public speaking, that's a dead item for now. And you're right. I mean, that was a pretty important part of my livelihood. But we move on and adjust.
Yeah, this is, I think, my fourth reinvention in 20 years. I came from the media side of things, and the internet was our paradigm shift. I mean, when the Los Angeles Times loses 90% in classified ad revenue in 1 year because of Craigslist, that's a paradigm shift. It is. You got to adjust. And I tell people all the time that when you have a monopoly for 100 years, like a newspaper had in most towns, and you got to file bankruptcy or get bought out, that's a paradigm shift. And a lot of newspapers and media still haven't figured out how to adjust or make revenue or figure it out. I tell people all the time, worst business decision I ever made in my life was going on the internet. That was the worst business choice I ever made, because I never made anywhere close to the money I put into it, But I did want to go back to that, the free market, managed market, because one thing that I think is kind of important to talk about, and maybe you'll disagree or agree with me, but back in the 1970s, and I only know this mostly from history because I was a child at the time, but I do remember lines at the gas pump and et cetera. And one of the things that was interesting when I kind of look back at the history, before the shale boom happened, really only, 15 to 20% of the marketplace was private. The rest was pretty much countries that controlled the global oil, market. And I think it's a little bit different this time. I don't know if we're going back to that, trying to get back to that 20% of just private, and the rest is, countries controlling it, like China and Saudi Arabia or what. But do you know what I mean by that? That the shale revolution's really what allowed the private sector to really explode in oil and gas once again, because the 1990s was nothing. I mean, you didn't hear anything from energy in the 90s.
Well, you have to go back a little bit further. I mean, I think the global picture was probably 75% public companies, companies you could buy stock in, which you're calling private, but I'm calling public, and about 25% national oil companies, before the 1980s, 1990s, and then it switched, and national oil companies started appropriating basically the public companies that were doing business in their countries. And in Mexico it happened earlier than that, in the 30s, but it happened in Venezuela, it happened all over the world. And so by the turn of this last century, it was probably closer to 75-25, and that has moved around, and I don't know what the right number is. Maybe it's migrated back to 50-50 or something like that. But we talk a lot about the shale revolution, and it's I guess we use the word revolution awfully freely, but shale is a big deal for those of us who are here in the United States. It's made a big difference to U.S. production. It's kind of changed the balance of global production. But, as a proportion of reserves, it's still pretty small. So, I'm a little squeamish about, getting too far down the road with the revolution. But to your point and your question, Jason, there's a ton of little companies that are simply not going to survive what's already happened, much less what's going to happen. So the main theme that people should be aware of is that the effect of shutting in production over the last 2 months or so is that an awful lot of public companies, small public companies, independents, if you will, have no revenue. And they have debt. They have huge debt. And so there's no way to pay the interest expense. And so right now they're turning their wells on as fast as they can to try to get some cash flow to make those back payments, because if they don't, they'll have to declare bankruptcy. And so I've said, and I continue to believe this, that there will be a tremendous number of small companies that cease to exist in the near future, oil companies in the United States, and they won't be bought by Exxon or Chevron or Conoco. They will become the property of these, the same way as General Motors is de facto owned by the U.S. government after the 2008 financial collapse. So this company has to go bankrupt, and nobody's willing to buy them. And you got these majors, including Shell, who, are not even able to pay their dividends. So can you imagine them saying, oh yeah, we're going to spend X number of $1 billion to buy these little oil and gas companies at a time when the world has more oil than it knows what to do with? That's not going to happen, in my opinion. I'm prepared to be wrong, as I always am, but I think that, again, we use words carefully. Are we a socialistic country, or is it a managed economy? Is the United States government going to nationalize oil companies, or will it become the de facto owner as it did General Motors? Choose your language any way you like. Language has a connotation, but one way or another, that's what I see as a probability, maybe a strong probability.
Well, I would agree with you. In fact, you can go back on my interviews last October and November when we started our marketing campaign, Ready for Anything. And the reason we would say ready for anything is because we said you're going to start to see the shift in 2020 down to maybe 20 companies across the globe that make up 95% of the marketplace. And by companies, it could be, Saudi Arabia, whatever their IPO is, and China, and, countries acting as companies, so to speak. And I thought it was going to be a 16-year-old girl that was going to bring down the industry, but it ended up pretty much being a virus. And a lot of these issues really did start last year, and so I think the virus kind of sped it up a little bit. And that's, to me, why I think the reading of your tea leaves are a little bit more on the accurate side than inaccurate side, if that makes sense.
Yeah, I tried to point out to people that the price collapse, that oil price collapse that took place in the fourth quarter of 2018, that was a really strong signal to the oil industry worldwide that something needs to change. And people, they said, oh yeah, that's art. He's got some funny ideas. But the truth is that, speaking of managed economies, the oil market has been managed since the end of 2016. We have had OPEC Plus withholding, 1.5 million, 2 million barrels a day since 2016. And now we're up to almost 10 million barrels a day. Okay. So we've got a managed oil market, and that doesn't work very well for very long. So the market in 2018 was saying, look, guys, we have so much spare capacity and so much excess production that, we're going to send you a price signal. And the price went down into the 40s. And everybody recovered and said, okay, that was a blip. I don't think it was a blip. And so when you say that the coronavirus kind of reactivated or accelerated trends that were already existing, right on. Absolutely. You ignored my price signal in late 2018. So how about the price signal that we're getting right now? Is that strong enough for you? We hear analysts and, the head of Rosneft, the world is there's going to be a supply shortage in a couple of months. Well, no, not really. All that has to happen is that OPEC Plus stops withholding 9.7 million barrels a day, and there's no shortage anymore. We had a Saudi refinery, the biggest, most important refinery in the world, attacked, blown up in parts in September 2019, and oil prices, they spiked for a day or two, and then it was over. And people are saying, wow, what the heck? Any time in the past, that would have pushed oil prices to $150, because the market knows there's a ton of spare supply that's sitting out there. You can't manage an oil market for 4 years without having some unanticipated consequences. So you're right, the coronavirus was the trigger, but in my opinion, whether you're talking oil industry or the greater economy, it just accelerated trends that were already there.
And, I'm looking at the clock here, so I don't want to keep you too long, but one of the things I did want to mention is kind of telling the bigger story and moving things along is what's going on in China right now with the natural gas market. They're calling it a consolidation, but generally when a state's requiring the 3 biggest state-held oil corporations to do something, that's pretty significant. And I don't know. I think that's more of the trend, more of the same trend with certain things, the way, whether it's by bankrupt or by force, it just seems like more and more countries are getting their hands on control the energy. Let's just call it that. Control the energy supply. Have you started to look into this consolidation or forced takeover in China, whatever you want to call it?
Well, those Chinese those are basically state oil companies to begin with. PetroChina and Sinopec and, CNOOC. They're only marginally, they're traded publicly. So in the same way that, 5% of Saudi Aramco is now traded publicly, they're not exclusively national oil companies anymore. But anyone who thinks the Chinese government doesn't have deciding say in whatever happens. No, I think if you look at and go back to where we started this conversation, Jason, energy is the economy. I cannot think of a war in the history of man that wasn't fundamentally fought over resources, whether those resources were livestock or, jewelry or gold or oil and gas or coal. I mean, they're all about something, and China and the United States are, these are the two major world powers that are vying for supremacy, and you cannot. So China has a problem in that it imports an awful lot of the energy that it needs. It's really hard to be the dominant power in the world if you have to rely on other countries for your energy. I mean, that's just the way it is. And so I think that China is trying to convert the oil market into a buyer's market. There's nothing they can do about increasing their own supply, but by buying all this oil and refining oil and dumping it cheaply on the market, they are in effect converting it into a buyer's market. And if the buyers control what happens versus the producers and exporters, that works to their advantage.
Yeah, I just found it interesting. I mean, as you mentioned, there's state oil, so the only thing it really did is just kind of centralize power a little bit more, sped up timing on things. That's how I looked at it, is it just took out some red tape, which is kind of different for a government to do. Normally they try to add red tape, so this would anyway. But well, go ahead and give yourself a plug on how people can. Are you speaking now? Are you back on the road again? I mean, I don't know if conferences are, but I imagine you're ready to travel.
I've been doing most of my speaking on Zoom, to be honest with you. And so I see that as part of the way the future will be different, not just for people like me, but for business in general. No, I don't have any. I've got one speaking engagement that will require me to travel. I think it'll be in October, and that's the nearest. So that's different. But yeah, back to, if you want to see what I'm doing or thinking about, artberman.com is my website. I'm active on Twitter at AEBerman12, and if you just want free information, you can get it in both places. If you want a little bit more information that might help you in your investment decisions and strategies, for not very much money a month, you can get those better insight and content at artberman.com.
Excellent. Thank you, sir. Appreciate the time today.
Good to talk again, Jason.